Joining me now for more is Tim Anderson. He's Managing Director at TJM Investments. Tim, it's great to have you on the show.
Oh, it's so nice to be with you this morning.
Joining us because you are based on the floor on a
Yes,
regular basis,
yes.
so great to get your insight here firsthand. What do you make of the market at these levels, digesting, of course, the latest comments from President Trump on trade, in addition to the GDP report this morning?
Well, clearly trade is a big topic of conversation. It's a little bit of an uncertainty hanging over the market because it's very, very hard to differentiate Trump's banter on trade versus what is really likely to be put in effect. And if it's put in effect, is it going to be for a month, for 2 months, or for a couple of years? We really don't know that, and it creates a little bit of uncertainty overhanging the market. The GDP report clearly right in line. It's a little bit of a lagging report. But the durable goods report also came out today, and that showed some positive activity. And the bond market really, people have not been talking about it that much, but maybe 2 months ago, yields were up around 4.6%, and everybody was very nervous about that. Boy, if they hit 5, it's going to be a real red flag for the market. Well, now they're down to like 4.25, 4.3, and you would think that eventually the market will get a nice support level from that. So
what I said earlier, you have firsthand knowledge, right, and insight that you can provide, of course, our viewers, because you're based here at the exchange. Given all of the headlines that we've been digesting in this new year, what is the sentiment, Tim, on the floor right now?
Well, I think the sentiment is long-term very positive, and short-term a little bit of, well, let's see how we get through the rest of this month, which is only till Friday, and then let's see how March sorts out, because that will be the end of the first quarter. So a little bit cautious, but not wildly cautious. I see that sentiment numbers have dropped considerably in a couple of surveys, just that I was looking at very early this morning. The percentage of people bullish is way down from what it was. That's probably good. And clearly in the immediate term, everybody's going to be looking at the market's reaction to NVIDIA, because a lot of tech names have been under some very strong selling over the last 5 or 6 days. Look, they've had a great run, not just last year and in the first month this year, but really for the last 2 or 3 years. AI has certainly been a major contributor to that last year. NVIDIA is like the poster boy for AI, and their earnings, the stock was not very volatile last night after the earnings came out. Sometimes it can be, not nearly as volatile as Snowflake, up 10% after their earnings, and Salesforce down 5%, Pure Storage down 10%. All names that are clearly major players in the AI space from one angle or another.
So it is interesting, though, because NVIDIA is such a large stock, right? So it does have an outsized weighting on the major indexes, like the S&P 500, for instance, and it, too, is now actually a member of the Dow. So how important is the health of NVIDIA to the strength of the broader market?
Well, I think that it's definitely one of the leading stocks in the technology sector of the market. But let's keep in mind that even though tech stocks have had some of them are down 15 or 20% from their highs. I mean, my gosh, if you look at something like AMD, which is maybe a little bit of a competitor to NVIDIA on the low end of what they do, nowhere near their level, but it's a player, and it's down close to 50% from where it was middle of last year. And but even though tech there's been so much selling in tech the last 5 or 6 days, it certainly can't be considered to be a market rout, because the industrials and many of the consumer names have held up very well. And I think really it's just been some very vibrant sector rotation out of a group that maybe some people were very overweighted in tech to areas where people have had lesser exposure and have been underperformers for the last 12 to 14 months.
We have seen the S&P 500 pull back several percentage points from its recent high, not quite in correction territory yet, which of course would be a 10% pullback. Is a correction healthy for the market? What should investors make of a pullback like this amid trade policy?
Well, it is healthy for the market because many people will say, well, we haven't had a significant correction since, maybe 3 years ago, or there's different ways to look at it. We've certainly had very sharp dips from time to time, and then we immediately go back and make new highs. So it'll be very interesting to see going into March and after this inflation report that we're going to get on Friday, whether or not tech gets its footing again and you see a lot of those names start to rebound and maybe work their way back to where they were earlier in February. And is there money flow still coming out of tech and going into industrials, cyclicals, materials, financials? Those have been the stocks that really maybe have been the beneficiary of a lot of profit taking in tech.
All right, Tim Anderson, Managing Director at TJM Investments, based here on the floor. Tim, always good to get your take, especially in studio. Thank you.
Sure, it's so nice to talk with you this morning.
It's great to have you.